Hi all, let's delve into today's market review and market performance. The market experienced significant volatility with the benchmark index closing down approximately 1%. At the close, the Sensex index dropped by 801 points or a decrease of 1.11%, settling at 71,139 points. The Nifty index also declined by 215 points, a 0.99% decrease, closing at 21,522. Among the Nifty index constituents, the companies with the largest declines included Bajaj Finance, Titan Company, Ultratech Cement, NTPC, and Reliance Industries. On the other hand, the companies with the highest gains included Tata Motors, BPCL, Grasim Industries, Eicher Motors, and SBI. Except for Realty and PSU Bank indices, all other indices recorded losses, with capital goods, fast-moving consumer goods, pharmaceuticals, and power sectors dropping by 0.5 to 1%. The BSE Midcap Index decreased by 0.5%, while the Small Cap Index closed flat. In terms of specific stocks, Dr. Reddy's recorded the highest gain among Nifty 50 stocks, surging by 1.41% with a trading price of 5,926 rupees. Hindalco, Wipro, Tata Motors, Hindalco, Wipro, and Tata Motors. There's Tata Motors. And TCS also saw gains ranging up to 1.28%. In contrast, Bajaj Finance, NTPC, Bajaj Finserv, ITC, and Powergrid were among the top losers in the Nifty 50. The overall market breadth on the BSE was robust, with 1,913 stocks advancing and 912 stocks declining. Among the 30 stocks in the BSE index, Infosys, Airtel, HUL, TCS, and Axis Bank led in terms of gains. Additionally, the stocks of UTI AMC, NHPC, Firstsource Solutions, RBA, and IRB, also NLC India, also surged by 7.9%. On the flip side, Garware Technical Fibers, Bajaj Finance, Borosil Renewables, SW Solar, Chalet Hotels, and Adani Energy Solutions, so their stock prices declined by 6.32%. The government has announced a lower than expected bond sales plan for the next fiscal year as the country prepares for a significant influx of foreign capital in anticipation of inclusion in global indices. Bonds rose following the announcement. Finance Minister Nirmala Sitharaman, in her budget speech on Thursday, stated that the government aims to borrow 14.13 trillion rupees, that is 170 billion USD, in the fiscal year starting from April 1. This is lower than the estimated 15.2 trillion rupees in a Bloomberg survey. The net borrowing adjusted for maturities planned for the next fiscal year is 11.75 trillion rupees. Following the news, the yield on the benchmark 10-year bonds dropped by as much as 9 basis points to 7.05%. Finance Minister Nirmala Sitharaman announced on Thursday that the fiscal deficit of the year 2024 to 2025 is expected to be of 5.1% of GDP, compared to 5.8% in the current fiscal year. Presenting the midterm budget for 2024-25, Sitharaman stated that the tax revenue for the fiscal year 2024 to 25 is projected to be 26.02 trillion rupees. She mentioned that the fiscal deficit for the fiscal year 2024 is expected to be 5.8% of GDP, which is lower than the previously estimated 5.9%. And let's get into the investment strategy right now. Despite regulatory measures to boost market confidence, the Chinese stock market also experienced a decline on Tuesday. The liquidation of the real estate giant China Evergrande dealt a new blow to Beijing's already shaky real estate market, and market sentiment remains fragile. The yield on China's 10-year government bonds dropped to the lowest level in over 20 years as investors continued to anticipate further policy easing to defend the stock market after Beijing announced a reduction in bank reserve requirements last week. On Thursday, the market index opened higher but experienced a subsequent decline after briefly pushing above 21,800, indicating significant resistance at higher levels. This is a point of caution and there is still a risk of further decline. investors should also pay attention to the gap position on January 17. If the recent rebound fails to fill this gap, there is a risk of deeper decline in the future. Currently, the index is consolidating in the range of 21,200 to 21,800. Even if there is another adjustment, as long as it does not break the support at 21,200, there is no need to be overly pessimistic in terms of operations. However, the current position is not suitable to adding positions or opening new ones. It is advisable to hold existing positions and wait for further developments. That's it. Thank you.